Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday here, and we are now at UTC +1. So now the brain's finally adjusting to that logic. We are just gone a couple of minutes past 1100 UTC. As always, a very big shout out to everybody that's joining us live today. Been getting between 4,000 or 5,000 people on each show at the moment, which has been a blessing. I know the markets probably aren't giving most of you what you want to see, and I know there's a lot of turmoil out there. So we're going to continue in the fashion we've been doing recently. It's very, very important to understand a little bit of the macroeconomic picture, what's going on with the economy. We're going to take a look at a couple of the news headlines hitting this morning. Obviously, now we're through the initial stage of the tariff release from the US. We need to look at the bond markets briefly as well. As I've been going on about for a long time now, and I know some of you, don't necessarily enjoy this part of the show, but it's such an important part of the show, because without it, the levels, everything else had far less context to it. What we're looking at the moment is a great period of global uncertainty, tariffs coming in for the first time in a long time, the impact of which, outweighed by economists, is not particularly a good one for the US economy. What's not good for the US economy typically isn't good for the world economy. Always remember the US, the dollar is the world's reserve currency, right? And foreign entities, countries, etc., own a lot of that debt. Now, there's been or I've been discussing two possible narratives, right? Which is the idea that Trump is doing this deliberately, using his mass manipulation of the media, for which he is, like him or loathe him, he is an expert, him and his people, at manipulating the media. This whole thing culminating in massive market-wide crashes, the dollar being lower, the bond market being lower. This isn't happening just because he's this kind of arrogant, ignorant person that a lot of people think that he is. I'm not saying he isn't those things, but in the context of what's happening with the markets, we need to remember that the US want the markets lower, right? Why do they want the markets lower? Because they're refinancing, I think, between about $6 or $7 trillion worth of debt, which is starting in Q2, which we're in now. Now, what does that mean? What does refinancing, or what does servicing that debt mean? Well, it means that they need to get the bond yield down, right? When they refinance that, they're going to be buying bonds. Typically, what you see is a period of quantitative easing. That's why Trump is putting pressure on Powell at the moment. For those of you who don't know, Jerome Powell is head of the Federal Reserve. Him and his team, in my opinion, have done a very good job of curbing inflation back down, lowering interest rates. The risk for them is that any large injection of capital into the markets at this stage could drive up inflation, which it almost certainly would, and therefore push the US towards a recession. Now, the idea here I believe, from Trump and his team is to use their expertise in the media to drive panic, to drive the situation, to overemphasize, these tariffs and the impact that these things are going to have before final negotiations have come into play, and thereby getting the markets down to a level. They want the dollar weaker and they want the bond markets down. So before we take a quick look at Bitcoin, let's take a look at what they've achieved, okay? So if we just take a look at the bond markets, we're going to focus on the 10-year treasury, okay? So the yield on this at the moment is 4.035%. Now, what we can see back here in January, this was at 4.809%. That means that if America, the US, refinance their debt up here, they would be doing so. They would typically get the central bank to print money. The central bank will buy these bonds, okay? And then from there, that's how they take on the debt. They put the money back in and then they're buying their own debt. Not just the US, other countries, and those bonds are open. But the US, there's a feeling this time around that they want to take a lot more of that debt centrally. Anyway, that's kind of a little bit of a different story. However, we've had these levels marked for quite a while. The first plan for the US, for the government was to get bond prices down below here. They achieved that. They then broke this level here, retesting it perfectly. And then this really was a little bit of a line in the sand moment, as was this dotted line here, which if I show you on the weekly chart, what that represents is part of a larger range area. And I've been saying for quite a while now, the US want the bond yield down in this area here, and basically as low as possible when they start to refinance, okay? So they're actually achieving that. We can see this here, even on a weekly scale. Look, the bond markets are dropping, all right? It makes the debt easier to refinance. I mean, the US 2s today, which saw a major hit, obviously the shorter term bond, shorter term yield, we can see here is now what's this trading at the moment? 3.586%. Again, when we're looking back in the highs, and okay, this was back in October, but if we look like for like, and we're talking around about sort of January time, even then on this dip here, remembering that obviously, you're getting paid a better yield to take on a longer term bond, right? Because of the risk allocation. But even here, you were looking at it still being at 4.4%. That's down over 1% now. So you can see that that's starting to work there. If we take a look at the dollar, what do they want from the dollar? Well, they want the dollar to be lower as well, right? Too strong a dollar makes it very, very difficult for international trade. And they're worried about that, the US, So there's a great rebalancing happening at the moment. And that really does play heavily into crypto, because until there's a foundation for risk assets to thrive, then cryptocurrency will struggle. I know there's a lot of stories out there at the moment about the decoupling of crypto from, equities and from things like the S&P 500 and the NASDAQ. And that will kind of be relatively natural at this stage, as the markets are just taking such a pummeling on a risk front, okay? It doesn't, for me, mean that we're just going to see this wild and, left field resurgence from cryptocurrency when we've got a market that is aggressively selling off risk. So before we kind of go into this a little bit further, we are going to take a look at Bitcoin as well. Another kind of proxy that we use here for risk is gold, right? So seen as the real flight to safety, the true physical asset, the absolute love child of real old school veteran traders, but also funds, banks, everybody. There is a limited supply of gold. It is a physically available asset. It's the physical version of Bitcoin, although Bitcoin is not considered a store of wealth, whatever people think that it is. It trades as a risk asset for now. I'm not saying that won't change, but we are definitely not there with it yet. And this thing has just been on an almighty tear. Yes, we saw the corrective move, which we saw coming at the end of the week, as markets really did sell off aggressively. However, look how well it's holding up. It's still holding the prior consolidation. We've got no structural breakdown at all. I think while these kind of counter risk assets really kind of continue to thrive, we look at the metals market as well. You can also look at defensive stocks, which isn't something we're going to go into that kind of detail today, but for any members with us, obviously more than happy to cover that off with you throughout the week. So this is kind of where we are really. We're in a picture where if we look at the kind of macro view of things, it is not a great environment for risk. So, sorry, I've kind of been rattling on and paid little attention to the streams. Eden, good morning. Anthony, my friend, how are we doing? Mark, Jesse, Nit, Jojo, lovely to see you. Funky T, my man, how are we doing? And good sentiment there as well. Happy Monday to you too, my friend, and to the Burb fam and everybody else out there watching the show today. Hope everyone's staying safe and managing their risk. It's a really good point. I've had the pleasure of trading with Funky T for quite a few years now. Jojo is always somebody who's part of our great community, as is Nit and many other people, Anthony and bits and pieces who are in the chat right now. And we've been looking at this for a while, right? And obviously in any situation you should be managing risk, but it goes to show you how desperately important it is, when you get caught offside, if you've been caught offside, all right? And Guzman as well, good morning to you. And a couple of points here. So Guzman saying, why is BTC falling? Well, as we're covering at the moment, this is not the environment for risk assets. As we zoom out and we focus on the economy and we focus on global affairs and we look at global economies and we look at the geopolitical situations unfolding, everything from Ukraine and Russia, the great tragedy happening there, the continued tragedy happening in Gaza, all of these things plug in and have an effect. And what the market's like is at least a decent amount of stability. And they don't like uncertainty. And Trump, with his tariffs and the way that he uses the media so effectively to achieve his means, I think puts a lot of worry through the markets, and positioning them becomes very difficult. Typically, you have a flight to safety, which means away from risk assets. Then you look at most of those risk assets, everything from the S&P 500, the NASDAQ, right, etc., all being a bit overextended and being on these really, really long tears. Okay, let me give you an example. Look at the S&P 500. Okay, so obviously this really bad here. We didn't get this move back above. Unfortunately, this was planned from quite a while ago. We can see we got the deviation here, never got the retest. Unfortunately, got the underside retest, and then just look at that aggressive sell-off from there. This was a key pivot point. This was the last point that provided strong resistance through to support. This deviation, when we got back below, all but confirmed the hope for the strength, excuse me, in the resurgence here was short-lived, and then price sold off quite aggressively. So while we're looking at, a landscape that looks like this for risk, which is pretty bad, we're seeing at least, a little bit of a bounce. We did gap aggressively down over the weekend, which was to be expected. We have to expect a little bit more pain in the markets until there's a solid foundation. What does the recovery look like for me? Okay, so that's something that I want to share with you. Mark here saying liquidity crisis is the guess as well. Yeah, I think majorly as well, the move away from risk assets is causing a really large problem. The tariffs also causing a problem, wrecking markets from everything, because people are looking at, okay, all of the metals that are needed, for example, so the commodities market is something you would look at. Off the back of that, obviously you could then pair that with commodity-driven currencies such as the Aussie dollar. But again, that's kind of a conversation for another side. But I think it's a really, really good kind of bit of input there, Mark. And Jojo, I always respect your position on, especially on traditional markets. Will we hit the circuit breaker levels tonight is something to watch out for. Yeah, exactly. I mean, you can also see as well that, so, if markets basically get into too much of a free fall, you can have central bank interventions, right, into the stock market. We're seeing that, I believe, in Japan today. I saw a few headlines, I think Taiwan, who are, stopping short selling, looking to put a curb onto this. When the markets get to that point, there's already trouble. Okay, that's what I would say. Now, something that's quite difficult to digest sometimes with these is that when you're looking at a lot of these situations, a lot of the worst is often priced in before we get the announcement, right? That's if you're looking at, for example, jobs data or PCE, CPI, etc. But with this, it was a little bit of a different animal. It was very difficult what to price in, because there was always the chance on April the 2nd that Trump came out and said, I'm not going to do any tariffs. Our allied countries have come forward, our other partners have come forward, even the countries that, that aren't our allies, but we do a lot of business and trade with, like China, for example, have come forward, and we've made an agreement behind closed doors. If that had happened, I think the market would have absolutely skyrocketed. So when we were around here, yeah, where were we? 4th was here, so April 2nd, right? This is where you saw this slight resurgence here, right? If we look at the S&P 500, just this little move up. And then the announcement of the tariffs, we saw that initial move higher and then the real plummet. All right. And that's because while we were kind of holding this area, there was that uncertainty about which way it was going to go. The problem is then when you lose one side or the other, typically people will cut those positions if they're not involved in them, if they were looking for the move higher. That gets cut, they move back to the downside, and you just get these cascades. So one thing just before we get onto crypto, hoping to get this tucked away in 15 minutes, which is looking quite likely. I just want to read you through a few of the key news headlines this morning. So the Guardian opening with the FTSE 100 plunges to a one-year low amid market turmoil. Goldman Sachs raises concerns over possible recession fears, the Telegraph, Trump tariff latest. That was quite tricky, actually. Trump tariffs latest. FTSE 100 and global stock markets plummet. Okay, so you can see the theme. Financial Times, Wall Street's fear gauge soars to an 8-month high. All right, again, uncertainty driving fear. For those of you that are very, very crypto focused, think about the fear and greed index. Okay, and then you got European markets plunges. Hong Kong index sees worst slump. European stocks tank 5%. And you've got some major companies down as well in double-digit figures. Okay, so you can see the narrative of everything that kind of plays through, right? So how do we take that on and how do we digest it? Is this a good time to be short the markets? How should we be looking to play this? Well, a couple of thoughts on that, really, and we're going to start by covering this on Bitcoin. Okay, so that's the kind of main market news out of the way. For those of you, I know there's some of you out there that don't really enjoy that, but believe me, it's very, very, very important in any market. Crypto is no exception to understand that kind of backdrop. So what are we looking at the moment? Let's just start on the weekly so you can get the context of why I've got some of these lines on here. This is the weekly gap. We continue to hold this for quite some time. This was a target of ours on the downside. As for why, if we look at this as a range of 50%, if we're looking from this as a point of risk to reward, we're now down in the area that's rewarding long plays rather than shorts. The reason I'm using this as an example is because it gives a very good idea as to why I was stating for so long that I just don't believe that major funds and entities are going to be really, really keen to get Bitcoin and crypto onto their balance sheet while we're up here. It's a bit overextended. We've had the major part of the run. Unless you're Sailor, then funds, banks, anybody that's out there looking to make money in these markets isn't really keen to buy here, right? And especially if you're a major entity, you have to get that past your risk manager. If you want that to be part of the portfolio, if you want to be taking those moves on risk markets like this, then you want to be doing it from a place that's reasonable. Being a buyer down here in the 70k region when price has already been up around about 109, you can see that making sense, because you're saying, okay, maybe it comes down a little bit more, right? Maybe the market kind of comes down to here or something, hell, maybe even comes down a little bit lower, but over time, as the market's correct and that time period is the difficult thing to ascertain, then we can see a resurgence, right? However, if you're buying here and the market does this to where it already is, then you're already down a huge percentage, knowing that it can still correct deeper before recovery. You're buying it up here, even if you're averaging in on your way down, your average buying price ends up being somewhere like here, rather than if you're buying at these levels, then the buying price obviously becomes a lot more appealing, all right? So let's just pop that back for a second and let's put this on here as a traditional Fibonacci, all right? Now, the next point of interest here is the golden pocket on the Fibonacci. And another part of the reason that I really like this spot, I just draw another one, so I do not know where that rectangle has gone, but an area that I'm interested in here is this, right? Because, if we look at this kind of area here, it's had a lot of interaction with price. We've seen this whole area acting as support until we got that strong close above. We never retested this area. Strong resistance through here. Prior consolidation, that led to the current run. Now, this could be the first retest of this area. This is the area that I am really, really paying attention to, right? As Jojo says here as well, we were calling BTC 70 to 74k area, but Just Pit mentioned we could go lower to 70k. So, as I said, Jojo's a fantastic member of ours over at the Bourbon, is very, very knowledgeable market trader through FX equities as well as crypto. Just Pit is one of the trading team over with us as well, one of the best price action traders I've come across in my career. And, we're looking around these areas for this reason, right? You've got the top of the consolidation. I don't want to speak for the other traders, obviously, completely trust their, analysis and plays. It's what's kept us so profitable, certainly over the time that I've been here, and definitely before I was here as well, when we had amazing people leading the team like Libs. But as we see things like this becomes a key area. We then overlay the fact we've got a weekly gap sat here. We overlay the fact we're coming up to the golden pocket, the top of this prior consolidation. All of a sudden, I think this is a very, very attractive area to buy. However, I'm not just going to punt on that, right? What I would want to see is price coming into this area here. And if we're looking at this on, say, a weekly chart, then I would want to see, something like this on a 4-hour. I would want to see some impulse. I want to see some liquidity taken, right? So that when this breakout happens here, this is where we can look to be involved in the market on the retest of this level. This isn't obviously on a weekly scale. I'm not waiting for price to get back above here. right? Although, you know, that would technically be on a weekly scale, pretty safe space to look for those long setups. But that's what I'm looking for. Lower time frame, looking for those breaks and change in structure so that it allows us to get on board in a sensible place. Hey, Erica, how you doing? Another Bird Nest legend over with us. Great to see you. So that's basically where I am at the moment on BTC. All right, I think let me pop down to the daily so you can see why I'm really interested in this level. So I set out the daily Bitcoin report that we do for members of the Bird Nest, and I do it on a Sunday. I really enjoy doing it on a Sunday. I always spend time on a Sunday realigning myself with the markets, taking a look at the pre-markets open, see what the plan is for the week ahead. And, you know, it doesn't exactly look like the smartest plan at the moment, because from the weekly report, we were up here at the time of writing saying that obviously the key target down here are these equal lows. We do have equal highs above as well, 2 key liquidity pools. The idea was waiting for that kind of pre-market to flush out these lows. Then the plan is this: if we wicked down and recovered this, so like we did previously with this, for example, notice how when price drove into this low, look at the difference here between these two lows, right? This low and this low here. Nice long wick lows as well. So we can see there was absorption here previously. That's why we want to target these areas. This wick low here, look how price had a large bearish body candle and something I would refer to as a strong close. Strong close means a high volume candle, meaning a large body candle with minimum downside wick in this case, meaning that we're not seeing a lot of absorption for buyers and the sellers are clearly in control. The fact that the liquidity below this level wasn't enough to get price back above it, if the body had closed back above here, I would have expected at least relief to a key area above, either a retest of this order block low or maybe into this gap, all right? However, when price closes below, in this instance, it's telling me it's hungry for liquidity lower. Then what did we see? Well, look at the way price wicked down below this. So when we get the close here, we're looking for price to move higher. However, what happened here was we opened, price tried to get back above this level, led this long downside wick. Again, like any deviation, when price tries to climb back inside a range or above an area of resistance, in this case, the opposite being true for support, which we'll cover in a minute. But in this case, with resistance, price coming up, when it gets back below this level, if there's not weakness in the markets, if the market's ready to take off here, why would we come back below it? So at that point, you can take higher probability setups to your next key liquidity pool, which is here. Now, when the next move came out, we'd obviously re-engage with this low here. But the next thing that we've done, I'm just going to move this back, look at how the wicks, the bodies can't get below. And then ultimately what we did is we swept liquidity from here. Swept liquidity from that low. Again, came back above. That's what allowed us to get on board with this short-term bullish resurgence, right? So why is that important? Well, it's important because of what I'm just about to cover with you now. It's how we're looking at these lows here, right? Now, this low here, what happened? Did we have a long wick down? Did we climb back above? Were we back in this range here? No, unfortunately not. We had a long and hard close below this, a very strong close. Therefore, it meant, as we outlined in the Bitcoin report, and by the way, you can just go and look across and look at my Twitter report. I release typically the team do, we share it, and everybody does a different one every day to give people different perspective from different professional traders. Is I do a weekly, a daily, and a 4-hour, and I shared the weekly and the daily most Sundays on Twitter for everybody just to see and just kind of get my thought process out there for the week. And I like the accountability in truth as well, not just for members, but doing it in the public domain hits different because all kinds of wild, crazy characters in there, all right? So as we get this close below, this was now our target. So now, as I've spoken about previously, I'm now looking for this kind of move here. I want to see price close back above this today, showing me at least short-term relief. From there, we can use our 4-hour and say, okay, let's imagine price closes around here. Then, and also price is now back above this level here. So I think we could see some short-term relief here. We're going to look in a moment. How funny, Jojo, I just saw your message then. And I was about to make this comment. We're going to take a look in the moment at the high impact news as well as the VIX, which has really, really been helping us out in terms of looking for that overextended volatility. Anyway, as we've seen here, we've seen price now climb back above this level. There's a key point here I would like to see price get above, and it's this low, all right, which is at 77,188 flat here on Bitget. Why that low? Because that was the last low before price broke down below it. We look for these lows to be retested and to push price lower. Typically, that's what we look for, right? However, in this instance, if price does look like getting back above that, then I would see that as a little bit of confirmation strength. And I would be looking to take some very tentative intraday long position around this area here to this area. All right, that's our bearish gap that we've got sat up there. Just going to write that in. These gaps are formed, these inefficiencies in the market when there's a failure of order pairing means that you've just got such selling pressure coming into here. The orders don't pair, you get that huge slippage effect and the markets drop like a stone. You get the same thing when the markets pump. Ultimately, to look for an early stage resurgence here, what I want to see is I want to see price back above this. So first port of call is above here, and then we move higher, all right? And then obviously just targeting this gap to begin with. Then what I really want to see is price close above this, treat this as support, and then move higher. Now, if we get that move down here, once again, I'm not just going to blindly long this on a lower time frame. What I'm going to look for is price to be above this level, close above it. Then I want to see price setting a low, sweeping out a low, recovering that low, and then moving higher. All right. Why is that important for me? Because it's the liquidity sweep here, taking out the low at a key level. Yeah. So this is obviously on a lower time frame. Price has that expansion. We see that strong move higher that ideally leaves us a gap in here. That's where we can look to become, confirmation bias. It's always very, very difficult. You're kind of trying to catch a falling knife at the moment. But I would say that, when you're in those scenarios, don't make life any more difficult for yourself than it needs to be, okay? In the same way that when we had this move over here, this pullback, yeah, or this move higher here, when price is trending down, you're looking for these pullbacks to short, all right? You've probably heard the saying of buy the dip. Well, the other one is short the rip. Okay, so when you're in a bearish scenario like this, what happens? Corrective move higher, short, 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 get stopped out. Yeah, get a structure change here, bullish gap, get on board with the longs. Yeah, you've bought this dip, you then buy this dip. Yeah, what then happens is that fails, you close back down, and then you're using this bearish gap here to become a seller, all right? So I think some of the problems people have with trading is that they don't want to be wrong. Well, actually being wrong teaches us a lot, because if you continue to try and long here, the price breaks down, you're already on a macro scale more bearish than bullish, so you jump back on board with the trend that presents itself to you. You just decant that onto lower time frames to execute moves when you're looking to either get long. Remember, like we said here, if we get back above and establish ourselves above this level, then I will look and consider intraday long positions. I would use something like a 15-minute chart, for example, to get on board. However, obviously, once we get to this area here, I'm not going to be longing into this. I would look at this as potential retest for price to move lower until it shows me the strength of getting back above this gap. All right. Now, let's take a very quick look at the VIX, which is the volatility index. I don't really see lots of people using this. Jojo and I have some fantastic discussions about this over at the Nest as well. What type of gap is that in 4 hours, 2nd of April? Let's have a look. Which one? This one. So this is an inversion gap. It's not at first. So these are really key to obviously how I trade. You'll know this, Anthony, being a member, right? But I know you're kind of quite new to these concepts, which is why I really like you asking questions. And for anybody else out there, please do let us know, guys. If you've got questions for these shows, just ask away, right? I can't explain what an annoyance I was to some very wonderful mentors I had in my early stage trading career. I used to just ask crazy amounts of questions, and for me, it really helped. And I actually found it I found people very receptive as long as you weren't asking the same questions all the time and you're learning from them. I think people are very happy to help. Typically, not everyone. Now, this was a bullish gap, right? We've got a bullish gap here. And again, we're talking about confirmation. So what would I be looking to do here? Well, I would have been looking to long this gap, right? Let me move this back. Sorry, TradingView is moving a little bit slow today. I'm going to assure you it's nothing to do with the subs being paid to them. But, I think a lot of people obviously out there at the moment. So for here, look, like we said, right, you're long on the dips. When you come here, you create a perfect opportunity to go long from here. So what happens? The plan is to go long in here, yeah? So then you get this candle, right? Boom. So worst case scenario, you get stopped out of a lower time frame trade there. Price closes back below. What now happens? This becomes an inversion gap, meaning that this area we now treat as support. The next thing that we've done here as well is created a high probability bearish order block. All right, I'm not going to go into too much education detail today. We have courses available for everyone. I've got a lot of stuff in the public domain as well. If you're interested in that, this is how I look at order blocks anyway. I want to see high probability order blocks that have taken liquidity, has taken these highs over here, left a series of up close candles, bullish candles, in this case white, price closes beneath, and then we're looking at this here. Yeah, this is on the close below this. This confirms this whole area as resistance. So from this point on, I'm looking at where the clear and obvious liquidity is to the lows, which is here. As we then kind of scoot across, we can see we have other lows in this move as well, making these equal lows and a high probability liquidity pool. So then I'm saying, okay, well, now what I want to do is however I can on the charts, as long as I get the opportunities, any pullback on the lower time frames, I short into here. If we recover this level and market structure, then I go long. But if we stay below this, then I'm looking to go short, okay? So that's how we kind of use that in principle. And you can obviously see the nice little wiggly lines here. So we came into this area, we had this reaction. I said at the time, in fact, Razun and I were on a live show, I believe at the time. Another wonderful trader we've got over, and just I don't know how, he's just one of these young guys who's just so smart with tech and stuff like that. But we were looking at this low to get run. We didn't see this low to getting run, so I didn't look for this resurgence here. When we started to break down, I thought, well, now we're definitely looking to target this, all right? Not sure, Anthony. Hit me up in the chat, mate, because we just got other bits we need to move on to at the moment. So save the questions for the next chat, mate, and then we'll cover that off later today. But that's an inversion gap that's very important, because that's something telling you that support has now become resistance, all right? So you don't want to ignore things like that, because ultimately, if you do then go short here and you get back above it, well, you can be pretty certain then the price is actually moving higher. Very rarely you get caught in these kind of double deviations, right? Where price will come above a level, lose it, come back down, then get back above it, lose that again, and then come back down below it. You normally get one or two scenario. So in terms of Bitcoin at the moment, it's pretty straightforward, really. We run this level, want to see a resurgence above here. At the moment, until proven otherwise, this is resistance, all right? Let's get and close above this and make our way towards the gap here. Going to be difficult at the moment, I think, for that. But let's see what we get. Ultimately, the market has sold off so aggressively, we could see some really nice relief rallies coming across, right? Mark, yeah, really, really interesting. Just go through, mate, on any time frame. The higher time frame, the better, really. But what I would say is if you just pick any point at random, you look for the lows, what I would say in terms of high probability is you want to start seeing these at the extremes, yeah? Bearish gap, swept out of a weekly gap here. So the 4-hour gap comes into here. We get a close above it, tells us we can look for relief higher, all right? Now, if we look at this again, where else do we get these? Okay, if we look to the right, again, back in the weekly gap, but not just randomly in it, sweeping the low that had that nice bullish resurgence last time. So if we want to wait for kind of more high probability plays, wait for those inversions, look at the retest. It gives you 1, 2, 3 opportunities to get involved long here. I believe if we go over to here as well, obviously this was the gap that we saw inverted, and there was even just a very, very skinny one here if I zoom right in. Yeah, very skinny one there. All right. Typically with these gaps, you want to see those kind of bigger moves. Yeah. Like we had one here, for example, straight up into a bearish gap. Bearish gap did the job of suppressing the market. We then came into here, failed this, and price sold off. Like anything, it's not something that works every time. Nothing in trading does, right? So you need to make sure you study it and understand the data behind it. So now we're going to go and take a look over on there. Trader Guru, daily close about 70, above 77K, and you are long. Nice. Okay. Yeah. Kind of looking at something similar. 77,188. The last kilo here on the 4-hour before price sold off is an aggressive position, but close above here. I would look for kind of intraday or, you know, lower time frame longs to try and build into potential swings back towards the gap. So I can definitely see where you're coming from there, my friend. So let's go and take a look at the VIX now, right? So this is the volatility index. Don't know if many of you really cover this, but it should be something that you watch. All right, any very, very high spikes in this, as we can see. Just 3 kind of very basic levels on here to show you guys. Don't want to get too overly complex with it, but look, level of 20, when price goes over that, can cause a little bit of a risk averse attitude to risk assets. Could have found a much easier way to say that. But then obviously up in these kind of levels and you see price really start to get pummeled. However, something that's quite interesting when you've got data like this is if we sweep it back and then if we add, say, Bitcoin to this, here we go. You're very welcome, Trader Guru. I think you got a solid plan there, mate. Certainly for how I see it. I mean, it's difficult to find bullish scenarios in this market at the moment, right? But I think that's a pretty solid one. Let's do this in, I don't know if you guys can see the blue better or if you can see that. But anyway, let's take a look at this. So what we've done here is I've overlaid the price of Bitcoin onto the VIX chart, right? The volatility index. So when you're studying data like this, you can just use this little plus sign up here and you can find some different ones onto here, all right? Now, what's interesting for us here is I'm looking at this much more in terms of when price is above or below certain levels. So if we take it, right? So what do we get here? This is when the VIX pops its head above, yeah, the 20 level here. And can you see, it's difficult because of the way it overlays, but you can see the way price pulls back here. Yeah, that's the blue line. Then the VIX is comfortably below, yeah, the 20 level all the way through until here. It gets back above it. So let's just label that. We'll put that on here in red. This is when price got back below. So we'll put that in green. This is focusing on this 20 level as well, by the way, right? Price was then back below it here. So that's in green. Ultimately, price then peaked above it again here, which means that we turn it to red. But the real kind of, if we look at this here, the real kind of point here was when it climbed above here. Now, I know we'd already seen that sell-off. Again, these things aren't completely correlated, right? But what we're looking at it on is there are news factors that play into this as well. But one thing that's very evident is that when we have these large spikes on the VIX, it's very, very difficult for risk assets, all right? So do keep an eye on that. And, you know, Jojo and I have been watching this for a while. We can see price really plummeting down here now, but we can see that big correction. The other thing I would say is when you get these abnormally high spikes like this one, yeah? So let me just draw a thicker line on here so we can see this. And we're just going to do this in blue. No, we won't do it in blue. That's a silly color. We'll do it in blue and do it too thick. Yeah. So look here, right? That massive spike up here. Now, we did see a recovery at this point. What we did see here is a little bit of relief. So that's what I'm thinking about today. The VIX starting to come back down, maybe giving a little bit of relief to risk towards the beginning of the week. Okay, so we're just going to take a very quick look now at the news as well, right? What we've got coming up for the week. So we're starting this Monday, 7th of April. We actually don't have any major red folder news flooding through on Monday and Tuesday. Obviously, there's enough for the market to be getting on with. Give the man an AI, great name. Thanks for your sharing your point of view. What about 72K? I'm looking around about, so sorry, on Bitcoin, we'll take a quick look at that because I had missed that question before we just pop onto the news. So what about 72K? Let's have a look. So in terms of 72K, let's just put a marker on here for a minute and see what we're looking at. 72K, anything that's to do with round numbers, okay, is always interesting, right? Because of the way that how difficult you have to admit it must be for markets that have stupendous amounts of money running through them, you know, billions and trillions of dollars. You know, how difficult it is to get those markets to stop and set exact and precise figures. And that's because it's human psychology, right? Human psychology says, where am I going to put my take profit? I'll think of a round number. You just almost do it automatically. MBA Unbelieve, hello, mate. Great to have you with us. Yeah, but a bloodbath last week, heading into this week as well, it's looking down, isn't it? But typically what we try and do is when the markets are looking down, in this case on an intraday basis, we're trying to look up. We're seeing if the other side of the argument is there. Quite difficult to kind of get on board with more short plays at the moment. But again, if that's the right thing to do, that's the right thing to do at the minute. We're looking for price to kind of draw back a bit higher to this area and then continue the sell-off. If it shows the strength of this area, then we assume that it's moving for the next key liquidity higher. So just quickly on the 72K argument, one thing that I really don't mind about that is this, right? It's a nice area. In fact, my good friend and wonderful price action trader who's over with us, we spoke about earlier, a guy called Just Pit, is very, very, very honed in on this area here. Again, as traders, we can't marry our biases, right? But this area here, why are we looking at this? We're looking at it collectively as a team and as individuals. As a trading team, we don't try and influence each other's decisions. We've all got to this stage in our career, trading our own systems and building our own success over time, right? So the point is to not try and, influence people's decisions, but to take on board their knowledge, plug that into your own data sets, and then help yourselves collectively, come to your own decisions. But there's so much confluence here. This is the top of the previous consolidation. We covered this earlier, right? So, 72K, I can absolutely see that. Why? Because it's these highs here that were never retested after this breakout. Huge consolidation, no retest, price ripped. But also, as we look at it even here on a daily scale, this and, Raz will be, the boy for this as well, resume. And I discuss this all the time. These are the consolidations that lead to these big rips. This again hasn't been retested, so this is a key area. And again, you can see that confluence in and around 72K to 70K. So I can absolutely see why you're there, give the man AI. That's certainly what would be my take on it as well. Right, so we're going to flick across onto the news now and just see what we've got coming up for the week ahead, because there is something that I believe could play in, and I'm focused on red folder news here. So there's other news that will impact the markets, right? But this, for me, I'm focused very heavily on the US markets, right? The largest market in the world is the world's reserve currency. It's the one that affects us the most in terms of the markets we trade. For me, anyway, being a trader of risk markets, obviously FX depends on the pairs that you have, but especially with cryptocurrency and indices. So what have we got here? We can see Monday, Tuesday, benign. The 7th and the 8th, no high impact, no red folder news hitting. That, for me, is happy days. That's why I think we could get this marginal or very slow relief bounce here, all right, on risk assets. We know we've not got any key news drivers. The market sold off aggressively. Yes, I think there will be that cascade effect that other people will start selling off. You've got market interventions happening, right? So it's very, very difficult at the moment to really get a gauge on it. But for some intraday plays, if we get some good levels, if we get some solid reactions, if we get our technical setups, it's certainly not something I would be afraid to step into. But again, at the moment, with the overall bias, you're looking for these rips to ultimately set you up for more shorts in the current environment. Now, Wednesday, we can see here, right, US FOMC meeting minutes. Yeah, that's going to be very important. That floods through at 6 p.m. my time. I know, actually, I believe this is still set to UTC, actually. So I'll double check that, actually. Need to see, because we're now 1 hour out. Yeah, this says 11:37 over here. So actually that would be UTC +1, so 7 p.m. my time. That's going to be when Fed Chair Powell speaks. Very important. Now, Thursday's a huge day. We've got CPI month on month, CPI year on year, and unemployment claims. Now, the market reacts a lot more to month on month because that's the most relevant and recent, but year on year will be important too. Now, we can see here month on month, previous was 0.2. They're projecting 0.3%, all right? So what you don't want to see here, you don't want to see them miss that number too large. And unemployment claims as well, which actually were okay. I think they beat the last two positive to the side of about 1,000 each. Is okay, but again, you want to see employment claims down. You want to really see some underpinning strength coming in the US economy, slightly higher GDP print. You want to see things starting to stabilize a little bit more. You want to see the jobless reports coming in. You want to see unemployment claims better than they were, to show that America's got that foundation for strength to start to build. So then we move through, obviously, onto Friday, and then you've got core PPI month on month, PPI month on month here as well. And then this, I think this is going to be a really tricky one. You've got preliminary UOM consumer sentiment, which has been low, and preliminary UOM inflation expectations. Preliminary, that means that this is probably one of the bigger movers, right? Because by the time the final print comes out, then the market's pretty much priced in a lot of that, okay? So that's what we're looking at in terms of news. Just beware when these things hit, they do inject a lot of volatility into the market. But again, often some of these things are priced in. But what I would say in these market environments, it's a lot tougher to do that. So you can see some very, very reactive markets. Right, so let's get back to the chart, shall we? And if anybody's got anything specific, we've got a few minutes to take a look at the end. So what we are going to do is start by taking a look at ETH. ETH, which has been probably the biggest underperformer, the biggest disappointment for most, I would say, within this market. It's just sunk like a stone. That it didn't really have the bounces. We didn't see the resurgence that it had. Solana really dominated, the altcoin scene and kind of took that place of ETH. This was the point at which I'm happy to add more ETH. I had actually added more ETH as well around these areas. I added some more ETH when we came into this area here too. Why? Because this was the consolidation that moved higher, worked very nicely through here. Nicely originally here, but then came back down. This is just what I'm adding to my long-term holdings, okay? Doing the same with Algorand, doing the same with ADS as well, which I'll cover with you guys. We'll take a look at Algo, because that's definitely at a discount at the moment, as is ADS, as is most of the market, right? You know, we'll take a look at like the crypto screeners and the tech screeners as well before we finish up today. And sure, Anthony, we can take a quick look at Gala as well. There we go. Okay, so Ethereum, where are we? Obviously, weekly scale, super bearish here. We've now come into this low, which we were highlighting, which is why the red line is there. There's a lot of liquidity resting underneath these untapped lows down here. So very, very possible for ETH to push down even lower. I'm not the kind of person that puts a figure on these things. I typically play these level to level. And for me, if we start to lose this level and close below it, I'm targeting the wicks of these following lows. I'm particularly interested in this one here, actually, which the low sits at 1369.62 here. So even if you said, you know, 1369 area, that low that rebalanced that gap, nice long wick low, that set the low of the market for a long, long time before that move up. Interesting to see what happens if and when we get there. We're not a million miles away at the moment. So we're going to move to the daily to just grab some more context on this. Obviously, this was just a brutal move down yesterday. You know, benign Saturday as the market kind of digested information, and then participants decided ETH was not value at this level, and ultimately it sold off quite aggressively. This is also a daily level here, so again, a daily close above this makes me believe we can get some relief back towards this level here. All of these lows in here remain untested, as does the order block here from the breakdown. So that's the area we're looking at. We have to really start driving down onto lower time frames before we can really see any kind of key area that we're looking to get resurgence here. Unlike, you know, with Bitcoin, where we had that lovely key low that we can look to reclaim, we don't have that here on ETH. It's just been selling off aggressively. And this would be a super aggressive play, right? But I would use the hourly here and this bearish gap. If we start closing above this, then I would look for start by building intraday setups that we can start longing into these highs, then into these inefficiencies. But ultimately, in these conditions, I am still looking to get in and out of the market quickly on any long positions, and I'm looking to leave runners on any shorts. Yeah, that's because the runners I'm leaving are aligned with my higher time frame bias, meaning that I have a higher probability of one of them delivering me a multiple R on when my main take profit is. However, you know, I'm basically just guessing on when the market's going to recover here. So there's little point leaving much or any runners on long positions here because it's a counter bias trade, meaning that we look to get in and out of those. You're looking to snipe position, grab some points or grab some percentages as quickly as you can. So for me, ETH is just, there's no resurgence here until on the very smallest time scale I'd be willing to consider this on would be inverting this gap, meaning that we need to close above 1536. Okay, so let's take a look at Algo. Our poor old friend Algo, which has just been getting an absolute pasting along with the rest of crypto, right? So what does that mean? I can't, there it is. Maybe it was on this one. What does that mean for us here? Well, what does it mean? What are we looking at in terms of that? Turn our intraday off for a moment. Maybe we're doing this on the Bitget chart, but it doesn't hurt to have a clean chart here. So, okay, we can see before what we were looking at. This was kind of the key pivot point for me, or key, but it's quite difficult here actually on Algo. You can see here resistance, strong close above, support, support, support through this area until this area was lost, looking for that to hold price and offer resistance, which it did and continued to do so all the way through here. So again, once we kind of lost this level, we entered the area and then sold off. Yeah, sure, NBA Youngbleed. You can just find it on here, right? It's just VIX. Yeah. So volatility index here. Use capital.com or. And then that's what we were looking at earlier to see it spiking above and below certain levels. By all means, reach out to us in the chats at the Bird Nest as well, and we'll run you through that. That's certainly how we look at it and some interesting study materials you can focus on as well. So with this here, right? We're pinned below this on Algo. This is on a weekly scale as well. We lost this key level here, you can see. And while we've been below this, we've ultimately always seen in recent times anyway, these pretty strong sell-offs, okay? So now, for me, it's about this consolidation down here and price coming into this. So if I look at this here and I say, okay, where's the, if I'm being really greedy, I'm just taking the lower candles there. I'm saying, right, well, that's an area there that I'm interested in. If we get there, I'll be happy to add more algo around. As people know, I've added more up here. You know, I've been a fan of algo for a long time. A good friend of mine and one of our wonderful fundamental analyst team over at Birdnest, Chris Crypto Assessor, also used to be known as Milky, you know, has had me onto this for a while, and rightly so. It's such a good company, team, project, you know. So when the markets do recover, what I'm saying to myself is, am I expecting to make money on this here? No. Am I expecting to make money on this here? No. Was I expecting to make money on it here? Yes, but over time, not immediately. We just happened to get that move that time. Did we get anything in here? No. Added more algo when we got back to here. Marginal bounce, held through all of this. Added some more when we had this breakout here, and I'll add more again down at these levels. Added more here, for example. That's how I like to kind of accumulate these projects that I have a long-term belief in. I'm looking at the prior consolidations or key areas of support to be a buyer. And then I don't sell those positions off. I'm just averaging in little amounts as we're on the way down until we get that good resurgence, that good recovery. Ultimately, you know, as you buy on the way down, as you're averaging in, you buy some there, you buy some here, you buy some here, you buy some here, just for example, then what happens is your average price comes to the middle of that. So then you've been a buyer from here. So when you get that big market pump, you've got yourself a good entry, rather than obviously not buying up any of those opportunities, waiting for the market to show its hand to you and say, get back above here. And then your average price entry up here is around about 0.65 when you could have had it around 0.3. All right, just the simple basics of DCAing into assets. So that's what I'm looking at there on Algo. On a daily scale, are we seeing any kind of key resurgence here? We're not. Again, I think this is the most obvious place for price to reach down to. Don't know why we'd see a reaction here, here, or here. What we use these areas for, these prior consolidations, are looking for areas of mitigation. I learned an incredible amount of this off of SC many years ago, teaching me this, and others as well, not just me, obviously, in FX markets, talking about piecing these all together. Look at where the buyers were present last time. What's price doing? We deviate that level, we come back below it, we're showing weakness, we can't break structure, we can't get back above these gaps or these order blocks. Chances are price is then looking for that next key area. So as we now look down, we say, okay, you know, if we're not going to get the result here and price can't find any bullish momentum, then a purge down into these levels seems really likely. For any early stage resurgence here on Algo, again, I would need to see price either above this level, right, which is 0.16832. Is that low before price broke down aggressively, right? As we can see what happened in here. Yeah, if we're looking at this, the last low before price broke down here, we closed below it. This is what gave us the opportunity to take those short positions. Look at the long upside wicks. Nothing there telling you that price was looking to climb any higher. And then we had the added protection of this nice bearish gap here as well, suppressing price. And again, ultimately, we start to get resurgence and close above this, then intradays up to here. All right, then you want to see this area flipped, and then you start longing up into these gap highs here, and then just taking those liquidity targets down in a really kind of controlled manner, because you need to remember that you're swimming against the tide in this particular instance. All right, so one of my favorite projects at the moment, ADS, I've spoken about this one a few times, a company called Alchemy, and this has held up really well, actually. It's a shame, because I think if it hadn't been for, you know, the current economic climate, we would have seen this thing really fly. Now, again, I want you to do your own research. I don't shill you projects. I don't ever tell you to buy anything, but I'm telling you the reason I'm involved in this project, as I've told people before, is I've come from a digital marketing background. I've built and sold, built and exited a digital marketing company that's still very large and prominent today. That was about 7 or 8 years ago, before I exited fully from my old life, which was building and selling businesses, building and operating businesses, to become a full-time trader, which was my massive passion for, even a long time before that. Best decision I made. I sold all my shares, gave up everything that I had, lost other bits and pieces during COVID as well, and really put the pressure on myself to make sure that I, maintained my career here as a trader. And it's one of the best things that I did. However, this is so simple, right? This is an amazing project. The digital marketing space is ripe for disruption. I know that it has been for a long time. Alchemy have partnerships with huge companies like Coca-Cola, for example, so they're already putting huge earnings through the balance sheet. They've got a fantastic team over there, very experienced people. They've surrounded themselves with some of the best people in the industry. It's a market that's ripe for disruption, and when the conditions are right, these are the type of projects I expect to rip. So why was I saying I've been buying this for a long time now, right? But I'm just always going to be a buyer at these levels. I was a buyer at this level here. I was a buyer at this level here, as I've spoken to everyone about. What I would say is don't just go out and buy this blindly because someone else is doing it. Go and research it. Go and understand what makes this company so incredible, what makes them very unique, and what makes them the best placed company in this space to achieve what they're aiming for. All right. Now, ultimately, as prices keeps driving down here, I'm just happy to add in little increments as it goes down. Once the market conditions recover, I fully expect this to do what we were looking at previously, right? Which is drive into these areas. Then we look for that market structure break in resurgence. Then it goes from buying the dips to looking for that, looking for those levels to push higher, and ultimately then getting involved in it. Marky Boy, Mexi is okay to use. I've had some issues with them years ago with withdrawals. Yeah, I think most exchanges, to be honest, have had issues. I mean, I've actually been fortunate enough to do a little bit of work with Mexi. They're not a partner, not endorsed or anything by them. There's certain assets that, especially when they're new and when they're emerging, are available on those slightly smaller exchanges before they're available on the larger ones. So it depends what you want to use it for as well. Liquidity can be an issue for certain exchanges. Obviously, we're partnered with Binance, Bybit, Apex, some of the biggest exchanges in the space, because it offers the safety and the security to our members, right? We're very cautious in terms of anybody that we partner with. We do extreme due diligence processes. Overall, the key thing for our community is that it ultimately benefits the members. And that's not saying that Mexi doesn't. That's something that I'm happy to do myself. But just to, full exposure, it's not somebody that we have a partnership with. But I haven't had any issues with them personally. So that's all I can really talk about on that front, my friend. So let's have a look. Anti-Mexi. Craigie boy, how are you doing? Always appreciate your work. I'm very kind of you to say, mate. Yeah, Mark, exactly, mate. I know you're not just kind of talking them down. A lot of these exchanges have had issues, right? Even Binance, who I couldn't have more respect for, same as Bybit, have had their issues over time, right? So it is one of those. Yeah, of course, mate. Look, we try not to ever lead anybody wrong. Ultimately, we make our money as professional traders. If you look at Crypto Burb, he made his money, his name, everything that he is a long time before we were educating people. This is just really a collective of professional traders who get a lot of value from working with each other. We've built a great community, great education, and we decided really that it's time to take that stand. And this was Crypto Burb's vision from a long time ago, was to find like-minded traders and groups that are willing to help put that little bit of extra work into the space to help people pursue their financial freedom. Ultimately, things that we all went through ourselves, and if that helps people, which I know it does, we see it on a daily basis. That's such a good feeling, a feeling that goes beyond, the differences of making money, coming into wealth, traveling, talking, all of that stuff. It's all amazing, and everybody there has got where they are by working incredibly hard. But we're now seeing members, we've trained dozens and dozens of professional traders now, and seeing those people go into the world, seeing those people speak at Token 2049, seeing those people, winning trading competitions and rubbing shoulders with some of the best in the industry is a really amazing feeling. But really do appreciate all your times. Yeah, I think I need to do some confirmation, but roughly kind of once, sometimes twice a year, we do a big physical get together. Whenever we're traveling, we always tell people, like, if anybody's going to be over in Dubai for Token, I think I'll probably be heading out there with a couple of the team, just trying to make sure at the moment that everything's good for everything's good for members at the moment, because obviously they're difficult market conditions to navigate, and people that are especially new to the space are in a lot of panic right now. Thankfully, not too many of our members. We've prepped them quite well for now, but this can catch the best people out. All right. This week we have to watch CPI, Jojo. Yeah, I agree with you. PPI, this one will be impacted by tariffs, agreed, and US bank earnings this Friday. Agreed, Jojo. As always, great insights. NBA Young League, when Burb sex, centralized exchange. Good Lord, I don't think I've got the mental capacity to run one of those, my friend. That's all I'll say. So if you want the safer play on here, what I would look at this kind of, what I would call like either a pivot point, or this is kind of the area that's really capping the market here. For me, this low was set. That's what suppressed the market here. I think if we see a high volume breakout above this level here, this could be when price is looking ready to make a run. So let's finish up here with 1 minute to go on Gala. And let's take a look at what's going on. What is going on with Gala? This is a project I know very little about, but I tell you right now, I quite like the fact that it's in and around this area. So what was the buying caused by over here? I think probably something like this. Just as a kind of rate, it's a big area, right? But just looking at this consolidation here before price had the pump, this was the first retest of that area, massive reaction, second retest, even bigger reaction, third. Now we're down in here, right? If we take a look at this, actually, it looks a little bit more like this move here, where price kind of caught people out because we saw this dip into here. This actually took out this low and this gap, right? And then things pumped. It did fly actually, Nick, didn't it? Jesus, I looked at it and I was like, God, I thought I was ahead of myself today. Then over here, see how price was just closing candles into this area and closing through these lows. That's fine. But remember, sometimes a confirmation entry isn't a bad thing, right? This here, that's capping the market. Price moved down. What do I say to you about these previous lows? Look to retest as resistance. Sell them to the nearest point of liquidity lower. When you get that big close up here, that tells me two things. Excuse me. Tells me that I love my inversion gaps, as you all hopefully know by now. So when we see price then get back above this level, a strong high volume breakout candle, yeah, then again, when that closes, I'm just looking for this point. Any retest here, I'm happy to be a buyer. Because if we break down here, then I'm pretty certain that we're heading for these lows. So it's a calculated gamble. We either rip here, in which case you're getting a lovely long trade because you're probably looking at a real kind of pressure release valve situation to the upside. If you show weakness, you get stopped out of that and you close back below here, then I don't know why the market would do that unless it's looking to take out these lows. Sometimes it's doing it to generate more liquidity before it recovers, but you know, not often. Often when you see at these kind of levels a strong breakout and then that failed to materialize, then it's ultimately telling you most of the time it needs liquidity lower down. All right. So in terms of that, hindsight's a wonderful thing, BC, but where are we at the moment? Well, I want to see us hold this. All right. If I track this line back, do I have any other confluence through here? Not really, other than the fact we're just down in this kind of larger consolidation here that led to this pump. So again, I'm not looking to actively short this. I would like to see price on a weekly scale close back above this level, but I appreciate we have quite a while to wait for that. So if we look on scale now, what could be our early signs of resurgence? Well, this is the weekly low and the daily low. So I'm going to draw that in but make the line thinner because again, this is a level, same with this one here. So I'm going to draw this one in too, where I'd expect price to meet resistance. Last lows, pre-break, price looking to come back and retest this before it sells off. This is methodology I learned from a trader called Trader Dante, still in my mind, one of the best price action traders in the markets. A real Bund, he's a specialist in the Bund, great FX trader and fantastic with crypto as well. But these are the kind of principles here that always made a lot of sense to me. And again, let's just use this as an example. What happens here? Price closes above. So we look to get long on this line. You see that strong close below that here. Where's the obvious liquidity here? So even if you get stopped out of a long there, then at that point, I'm like, okay, market needs liquidity lower. All right, so that's what I would be looking for here. And actually on Gala, I think if we close the daily candle here, then we've also got this added bit of confluence, which is this bearish gap. So again, we can wait for price to disrespect these levels, showing strength where there should be weakness, invert this gap and look at this as the base that leads us to driving price higher. All right, guys, ran over by a couple of minutes, but hopefully that was, hopefully that just shows you what I'm thinking about in the markets at the moment, right? Again, none of this is financial advice. But if you do find any of that interesting or you want to know more about what we do, you can find the information down in the description. We're a serious community for traders of any level, but people that really want to park the bullshit and actually learn in these markets, right? Because we've had members consistently making profit and money every single month. 17 of the last 18 months, for example, the P&L has been in the green and fairly substantially. And we haven't lost money last month. And we're doing pretty well this month as well, right? Through these really troubled times. If you want to understand how professional trading teams operate and the education and the resources that we're looking at, watching over, we provide and we help mentor, then come along and give it a try. All right. If not, you can always reach out to me on Twitter. You can find me at BC_Richfield. Let me just pop that in the chat. Always appreciate a few more followers over there. It's not really something that I've ever really kind of focused on, but looking to get over 10K followers, hopefully in the next few, just kind of snuck above about 9,000, 9,100, I think. So 9,900 actually, I think. So see if we can get that over the line and then together look to make a brighter future for everybody's finances. All right. So thank you very much for joining me today. Just shy of 5,000 people live just through Twitter. So absolutely blessings to everyone. Please do stay safe out there. And whatever you do, whatever your opinions are on the market, don't marry your bias. If the market's giving you signs it's going the other way, don't be afraid to jump on, but do have a tried and tested strategy to do that. You don't need to reinvent the wheel. You can always go and find one that works for you. Just make sure that you employ a lot of discipline, risk management, and understand that these markets are about making money over time. They are not a get-rich-quick scheme. If you can master that sentiment and that self-control, then there is money to be made in these markets. Just don't blow yourself up in these conditions, all right? Thank you so much, everyone. Have a fantastic week ahead, and I do look forward to seeing you all around the nest.